So a few weeks ago, I'm doing something I probably should do more often. I'm looking at my own 401k, and that's when I noticed something kind of weird. The allocation had changed, just by a few percentage points, but, I hadn't touched it. So I get on the phone with my provider, and they tell me my target date fund, which is managed by BlackRock, had been, and this is the quote, automatically adjusted to include alternative investments. That one little phrase sent me down a rabbit hole into what might be the largest and quietest movement of money in modern history. And it's a shift that could be happening inside your retirement account right now, and you might not even know it.
I am serious. When was the last time you really looked? Because what I stumbled upon isn't some wild conspiracy theory, but it is a deliberate, massive strategy that affects millions of people, and there's a good chance that includes you. And this entire thing is being driven almost single-handedly by one company.
By the end of 2025, BlackRock's assets under management are projected to blow past $14 trillion. Just let that number hang in the air for a second. It's so big it's almost meaningless, right? To really get your head around it, you have to compare it to something.
To put that into perspective, $14 trillion is more than the entire annual economy of China. It's double the entire U.S. federal budget. We're talking about a staggering amount of financial power and influence, and right now they are using every bit of it to completely rewire the investment world as we know it.
So you have to ask, why? Why are they doing this? Well, it's because the old playbook, it's broken. For decades, the absolute gold standard for retirement investing was the 60-40 portfolio. 60% in stocks, 40% in bonds. It was simple, it was reliable, and it just worked. But in the world we live in now, with rock-bottom interest rates and stocks that are historically expensive, that strategy just isn't cutting it anymore. BlackRock sees the writing on the wall, and they've decided to build a whole new model they're betting is the future.
So what's this new model look like? Well, you can just forget 60-40. The new world, according to BlackRock, is more like 50-30-20. So a little less in stocks, a little less in bonds, and then this brand new 20% slice of the pie dedicated to something called private markets. And let me tell you, that 20% slice is where all the action is. It's where the trillions are heading.
Okay, so what in the world are private markets? This isn't like buying a few shares of Apple on your phone. We're talking about things like buying an entire private company outright, or funding the construction of a brand new airport, or a toll road you might drive on. It can even mean acting like a bank and lending millions of dollars directly to other businesses. For the longest time, these kinds of deals were exclusively for the super, super rich. But that's all changing. Now, to completely dominate this new world, BlackRock didn't just invest in it. No, they went on an absolute shopping spree. They executed one of the most brilliant and strategic power plays I've seen in finance in a long, long time.
And it happened fast. In the span of just a few months, they dropped over $27 billion. First, they snapped up a company called GIP to become an infrastructure powerhouse. Then they bought HPS, instantly making them a giant in private lending. And then came the masterstroke. They bought a data company called Rewritten.
But why a data company? Well, because in the murky, non-public world of private markets, information is everything. Prepkin is basically the Bloomberg of this hidden world. And as BlackRock's own CEO Larry Fink said, when you own the data everyone relies on, you control the decisions. They're not just playing the game anymore, they bought the entire casino.
Okay, so they've built this incredible machine. The question is, where are they pointing this multi-trillion-dollar fire hose of capital? Well, they are making massive, concentrated bets on the real physical stuff that's going to power the world for the next few decades. It really boils down to four key pillars. First, what I'd call the picks and shovels of the AI gold rush. That's data centers and the power plants needed to run them. Second, a complete revolution in real estate. Third, the absolute explosion in private lending. And finally, stepping in to fund the massive infrastructure gap all around the world. Just take a look at the growth in AI infrastructure spending. It is a flat-out arms race. You've got companies like Google, Microsoft, Amazon spending hundreds of billions a year just to stay competitive. They can't fund all that themselves. They need trillions in private capital to build it all. And BlackRock has positioned itself to be the one bankrolling that race.
And at the same time, we're seeing this incredible pivot in real estate. For decades, those shiny downtown office buildings were the crown jewel of any portfolio. Well, today, with vacancy rates through the roof, they're becoming a dead asset. So where's the money flowing instead? It's going to the data centers that power AI and the giant logistics warehouses that make e-commerce possible. Okay, so this all seems huge and global and maybe a little abstract, but here's where it becomes personal. This is where it comes right back to you and your 401k.
See, BlackRock's entire grand plan depends on what they call democratizing these private assets, which is a fancy way of saying getting them into your retirement account.
Here's how the magic trick works. First, regulators, the Department of Labor, tweaked the rules to open the door for these kinds of investments in 401ks. Then, BlackRock created these new evergreen funds that are way more accessible to regular people. And finally, and this is the absolute key, they started adding these new funds into the default target date funds that millions of people are automatically enrolled in when they start a new job. And just like that, poof, your retirement money is now invested in private markets, whether you actively chose it or not.
Now, BlackRock will tell you this is all about giving you a shot at higher returns. And maybe it is, but let's be blunt here. It's also about the fees. And when you actually see the difference between the old world and the new world, it is genuinely shocking.
So a typical public bond ETF, the kind of boring standard thing that used to fill up your 401k, it might charge a fee of just 0.05%. I mean, it's practically free.
Okay, now compare that to one of these new private credit funds. They're charging 1 to 2% every single year, plus a performance fee, which means they get to take a 20% cut of any profits the fund makes.
If you do the math, that means the fees can be more than 40 times higher. And over a lifetime of saving and compounding, a difference that massive doesn't just eat into your returns, it can absolutely devour them. It's an incredible profit engine for BlackRock, and it's funded directly by our retirement savings. And it's not just about the fees. There are these hidden risks that most people have no idea about. First, these assets are illiquid. Think of it like this. Selling a stock is instant, but selling a building takes months. You can't just click a button and get your cash out in a crisis. Second, the valuation is totally opaque. There's no public stock ticker telling you the price. BlackRock just tells you what they think your investment is worth. And finally, there's something called redemption gates. It's a fancy term that means if things get scary and too many people want their money back at once, the fund can legally slam the gate shut and block you from withdrawing your own money.
So, after all of this, what's the verdict? Is this massive shift a golden opportunity to get better returns in a tough market, or is it a dangerous trap for the average, unsuspecting investor? Let's just lay out both sides.
All right, so the bull case. The story BlackRock is selling is that private markets can give you higher returns, better diversification away from stocks, and even protect you against inflation. It sounds great, but then you have the bear case. This says that you're paying outrageous fees for these opaque assets, and you're locking your money away in a liquidity trap that could end up being a huge problem down the road. Here's the most important takeaway from all of this. Regardless of whether you think this is a good thing or a bad thing, it is happening. A fundamental, massive reallocation of our retirement savings is underway, and it's happening quietly, behind the scenes, and on a truly global scale.
And that brings us right back to the very first question I asked. Millions and millions of people are being moved into this new world portfolio, many without even realizing it. Their life savings are being used to fund the biggest investment pivot in modern history. So the real question for you is, do you know where your money is going? Because now might be a very, very good time to find out.